Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio end of year weekday special. We're delighted to welcome back to the podcast Derren Martin, Director of Valuations at CAP HPI, joining us for his final update of the year, looking at how trade values performed over the course of December. Derren, I can't quite believe we're closing in on the end of December. Welcome back. What an eventful year it's been.
Yeah, thanks. Hi, Curtis. Hi, Phil. Yeah, it's been an eventful end to the year, certainly. But yeah, we've looking back sort of 12 months, the market was pretty strong. We put values up for the first 3 months of this year, which we've not done previously in any other year. So that was unprecedented. And then ever since then, it's kind of weakened off, and then fairly well documented what's happened since October. So yeah, it's certainly it's been an interesting time. We've been in demand over the last 2 or 3 months, certainly.
Yeah, I was going to say, it's been like that for the last few years, hasn't it, Derren? I don't think it's not going to stop anytime soon. I don't think either, is it?
What is normal?
Exactly.
That is a good question.
One time you'd be glad to get the year over and done with, but you know what you're waiting for again next year, though, don't you now?
Yeah, it's going to be fascinating next year, isn't it? ZEV mandate, volumes that are coming into the market on electric vehicles and how they get remarketed, and obviously you've got the used car values underpinning everything. So yeah, it's going to be another interesting 12 months.
You're going to get a long rest in, ready for it, aren't you? It's busy again, high demand again. I mean, yeah. Let's start with the headline trade 3-year 60 figure, which is now down for the 9th month in the row. I mean, do you want to talk us through some of the figures and what drove the latest movement in the 3-year 60 value?
Yeah, so I mean, you're always at pains to stress and so that it's the devil is in the detail, but we always talk about the averages, and the average drop at 3 years 60 is 2.1% in December, which is about £375 at that 3-year point. So 1.8% at 1 year and only 1.4% down 10 year, and that older stuff, the cheaper stuff, is holding up better. But that 2.1%, the 3-year benchmark point, is half what it was last month. Last month it was 4.2, and the month before that it was 4.2. So October and November, some hefty values there. Over the course of those 3 months, it's a 10.5% movement. So that is, it's been a difficult time, obviously, for the market. We've seen a realignment, as we've called it. And yeah, there's been lots of moving parts within that, but generally it has been a downward trend, which has been because of extra volume appearing in the market from new car registrations getting back to more normal. They're feeding the fleet and leasing industry in particular, and they have cars to return into the used car market. And then in amongst all of that, you've got demand has dropped away, not considerably, but dealers are wary, so they've not been stocking up. So supply outweighs demand. Vendors selling cars at cheaper prices based off the fact that they can afford to do that because they put those cars on, say 3 years ago, before those big increases in 2021. So it's kind of been the perfect storm for values, really, and we've been reporting on that. And I think, as we said last month, had a little bit of stick for what we've been doing, but it's been purely based off data and purely based off what we've seen mainly in the trade market, which has moved a lot quicker than retail.
And I mean, we are talking earlier in the month than we would normally talk, because obviously with Christmas and the break and very short month. But as you alluded to there, for 2 months of 4.2%, previous to this 2.1. But how has the month panned out? How have you seen sort of the change in the month? Because we talk about when the market's going to start to stabilise, when the retailers are going to be back in the market, potentially stocking up for January. What has the sort of day-to-day sort of activity been like for the month of December?
I would say it's been steadier than the last 2 months right from the off. As soon as you sort of those companies that still use monthly values, as soon they sort of consumed those, and vendors were looking at those, and they were what's appearing in the catalogues. There have been live values obviously appearing in the catalogues as well, and we're always keen to stress that live is definitely the way forward, especially in a moving market. But throughout the month, it's been it's not been like a week or so that was worse than any other. There's obviously this Christmas week, there's less activity. There's both vendors and buyers that are now sort of probably putting things on hold until the new year, hoping for a bit of an uplift from the market, really, certainly from a demand point of view. So it's been steady through the month, but every time we've looked at the data, we've generally been moving values down on most products. There's obviously the odd one that goes up based on those supply demand dynamics, but yeah, generally it's been a sort of a market that has continued to move down, but not at such a pace as the last 2 months. And we're definitely calling this a stabilization, and we think that will continue as well. So I certainly feel that the worst is over for those big value drops, and we can move on with some optimism from here.
I mean, that's interesting, Derren. And as you say, the price drops have been steady in December, and maybe not as steep as we saw last month and the month before. And price drops in December are pretty much the norm anyway. Does anything actually stand out for you this month? Or are what we're seeing, is it more a case of seasonal trends kicking in?
It is seasonal, but it's also I think it's slightly more than that. And obviously, when you talk about seasonal, that's not normally off the back of 2% months coming down as well. So what we've seen in December, this 2.1% drop, it's the second highest drop we've had in December since we introduced live. There was a 2.2% drop as long ago as 2014. Since then, it's generally a month that can go sort of, I guess 1.3% is sort of the average drop in December. So it is more harsh than that, but it's it's seasonal, and it's still some of the issues around what I mentioned earlier about that there are vendors that are selling at cheaper prices. The buyers, the dealers aren't stocking up in huge volume. But certainly in December, we've seen more dealers coming back out into the market and buying with an eye on they need stock for January than there were in October and November. Certainly there were buying bans. There was a certain degree of wariness during October and November. And now they're realising that not suddenly realising, they've obviously been planning it, but they've decided to go back in and to buy cars again, but still not overstocking, still being very careful with what they're buying, and yeah, not overdoing it. So making sure that they have enough cars to hit the ground running in January, but not too many, because it's still a little bit of the unknown. But we do think that January will be quite a buoyant month for consumer demand.
Yeah, I mean, we can talk about obviously outlook for what you're expecting for the next few months, but obviously with the recent inflation, and there's now lots of conversations around the base rate of what will happen with the Bank of England. But yeah, it's going to be a lot of questions. I mean, you mentioned it briefly at the start when you were talking about the overall movement, but I mean, in terms of what trends have you now noticed in terms of the different age profiles, as we're now in the fourth period since the production shortages had a severe impact?
Yeah, the main story is that older stuff, the cheaper stuff, is performing okay. That necessity purchase has been less affected by obviously by cost of living concerns. If your car breaks, you need a new one. And that's often at that bottom end. And feedback we've had from some of the auction, that area has been performing quite well, particularly if cars are in good condition, no engine management lights on, and so yeah, that's probably been the standout. 1 year, values have dropped by 1.8%, which is about £550, but nothing particularly untoward there. But I guess the interesting thing to watch there will be, we are starting to see pre-reg again. You're starting to see a little bit more activity from OEMs, so that could affect that late plate stuff. But generally, it's the older stuff that has performed the best.
And I mean, in last month, you talked obviously about some of the tough challenges around SUVs that were taking place in November. What's that like in December? I mean, you and I remember the days when you'd had true seasonality, didn't you, with convertibles and 4x4s, which has kind of disappeared over time. But how have the SUV sector performed through December?
I'm too young to remember that stuff, but yeah, they're definitely. It used to be when it was a proper 4x4, you'd have a not actually that long ago, was it really? You'd have an uplift going into the winter, but sort of half the vehicles are SUVs now, aren't they? So we've seen a 2% drop for SUVs, so pretty much in line with the overall market. Smaller SUVs and medium have been affected a little bit more than larger ones this month. So, but nothing sort of particularly stands out apart from. I think the interesting thing that we've seen is hybrids has seemed to have come under a little bit of pressure, not just in SUVs, but that's really one of the standouts here. But SUVs have pretty much gone in line with the market. The biggest drop this month has been for MPVs. So those multi-purpose vehicles, they've been affected the most. They've come down 2.7% at 3 years. So there's been some difficulty there. And again, so the hybrid in that area have struggled. There's more of those coming back into the market, and prices of those have held up the best all year in PV. So now maybe they're a little bit overpriced compared to SUVs or with the hierarchy. So although they're cheaper than SUVs, maybe they're just not far enough away. So they've been affected a little bit on price. And there's been plenty of cars sold by vendors out there that have been at very low percentage of cap, which has meant that drops have come.
Yeah, I was going to ask if there was any other. I mean, I presume in terms of other sectors. Then, do you think that the MPV? I mean, the MPV has had a bit of a roller coaster, hasn't it, through the last few years? I mean, it was fairly slow to pick up, and then it kind of recovered very quickly. You better go out and get your cheap Zefiras again, Curtis. But,
Yeah.
I mean, is there anything? I mean, do you think this is now that some of the fuel type is driving some of that strength and weakness by sectors now? Then, by the sounds of it.
Yeah, I mean, you're right. MPV has had a roller coaster ride, hasn't it? Really, since COVID, we kind of thought its demise was there, and then COVID came and it kind of almost backed that up because of sort of social distancing. And then after that, the staycation market meant that it was buoyant again, and not many manufacturers are making them. They're all making SUVs. So we've seen some really strong values. I think the cars that are still the highest above where they were 3 years ago are the Peugeot Traveller and the Citroen Space Tourer. So cars that wouldn't necessarily think had gone up by that much, but they're 50% expensive than they were 3 years ago. So maybe they do need to come down a little bit more, but obviously volumes are less. We've in the past, V-Class has been one of our big risers, and that's come down 5% this month. So maybe they're just kind of realigning a little bit there on the MPV side, but it's not necessarily a longer term trend. Say there are some cars that are being sold quite cheaply at the moment, and that's what's driving the market down. On the SUV side, again, they've done okay SUVs, but devil always in the detail, and there'll be some that have dropped by more than others. And as I said, it's the plug-in hybrid, like the MGHS, Citroen C5 Aircross, and Cupra Formentor. They've been the ones that have dropped by the most this month. So yeah, they're the ones that stand out, I guess.
And following on from that, Derren, looking specifically at trends across the fuel types, how did EV values perform in December? Because they have been under a lot of pressure this year. So how are they looking in December?
Yes, as we've said for a while now, it's difficult to talk about EVs as a fuel type in general, because you've got some that have performed okay. Overall, they've dropped by 2.3%. So it's slightly more than the average of 2.1%. But you've got within that, you've got some that have stayed level and hardly moved or not moved at all. That Hyundai Ioniq, Nissan Leaf, Skoda Enyaq. They've maintained their values, no change. But then you've got others such as the Polestar 2, which has come down nearly 5% or nearly £1,000. 2008 is down nearly £400. The I-Pace has dropped again. That's been under pressure for a while. And the Kona has come down 6% or nearly £400. So you've got lots of moving parts within that. And what you've kind of got there, you've got cars that maybe came down quite a long way previously, like the Leaf. They're now doing okay. But others where there hasn't been so much volume that have been under pressure. We've seen Mercedes product under pressure for the last few months as well, the EQ vehicles, but that's stabilised a little bit this month as well. I think it's still quite volatile, and the vehicles, the aspirational EVs, are still sort of jostling for position a little bit there. And the Model 3, we always talk about the Model 3, but that's actually only come down by 1% this month. But there's plenty of those in the market. Model Y has actually stayed level, and we're expecting a lot more of those back next year. So it's kind of watch this space on EVs really, and obviously, as we mentioned earlier, with the Z date, that's going to cause some issues in the market, because there needs to be a push on EVs now in the new car market, and what impact does that on the used car market, and is there a fully fledged used car market for EVs at the moment? Those are all the sort of questions that we're going to get answered over the next 2 or 3 years.
Yeah, definitely. And any notable trends across petrol, diesel, and maybe some of the pure hybrids?
That they've performed in line with the average, really. So there's no real sort of notable trends for petrol, diesel. It's mainly if there's a lot of them out there, they've been affected. But diesel, diesel's a lot lower in volume now. What's it, 7% of the new car market? So anything there is not because it's a petrol or a diesel or a pure hybrid. They've all performed relatively well, but maybe it's just some of those, as I said earlier, those plug-in hybrids that are now looking a little bit expensive, and they seem to have been affected. But again, a lot of that's down to volume as well, that a lot of them coming back into the market at the same time. The used car market is always supply and demand driven, and that's what we're seeing. And if there's a lot of them and they're expensive, then they have to come down in price.
And I mean, every month we have a quick chat about obviously what results from the poll of the auction houses. I mean, what's that been telling you this month in terms of that stock levels and demand compared to November? I mean, so you did mention it briefly at the start. I mean, what's the sort of main sentiment from the auction centres now saying?
They're all relatively upbeat. They see it as seasonal, what's happened as well. I guess, yeah, they're seeing an increase in demand in December. It's probably died off a little bit now this week, but prior to that, December's been okay with those dealers that have been coming back in and looking to buy again, and certainly on the good quality cars, they're fairly upbeat, and those cars are still selling well. Stock wise, I don't think there's any issues, even though conversion rates have been down over the last 2 or 3 months. We're not seeing, we're not hearing too much noise that they're overstocked, and I guess they'll be looking forward to January as well, and moving more of those cars on. Conversion rates have been interesting. That's pretty mixed really on conversion rates, because of the survey, around half of the respondents were saying conversion rates were down, but a third were saying they were up, and the balance was saying it was level. So yeah, it is quite mixed with regards to that, but certainly not all doom and gloom in the auction world. Yeah, and as I say, looking forward to next year.
And is that reflected from the dealers that you're speaking to anecdotally across the market? Are they optimistic about what to expect heading into next year? I mean, we mentioned earlier, obviously, around inflation and base rate and things going on in the broader economy. How are the dealers at the minute? How are they feeling?
Every dealer that I've spoken to has been beat, certainly with regards to what comes next, but also in December, they are definitely seeing it as seasonal. There's been activity all the way through. You've got different dealers doing different things, and maybe even doing lots of different things with their stock. You've got some that are holding on price. Of course, those prices are advertised prices and can be sort of aspirational prices. You've got others that they are being very strict with the days in stock now, and they are getting rid of cars that have been in stock for too long. They are selling them off quite cheaply, And also you've got dealers that are now buying at cheaper prices and then are advertising at cheaper prices. So you've got a real mixed bag of what's happening there. I do think that Christmas is going to come at a really good time. So if there is an uptick in consumer activity, it means that dealers can hold on price a little bit more, which means that those big drops we've seen in the trade market might not be replicated to the same degree in the retail market. And they certainly haven't been so far. It's been very much a disconnect between trade and retail. And I think that's why some retailers struggle to understand some of the movements that we've made, because we've made those based off the trade data mainly, and the trade values have been coming down very sharply. Retail hasn't, and there has been a big difference there. But hopefully those retail values won't need to come down, and that dealers can make a reasonable margin once the hoped for increase in consumer demand happens post Christmas.
And talking about that, Derren, what is your view on how prices will perform in January, especially as online used car buyer activity generally picks up from Boxing Day onwards, once everyone's opened their Christmas presents? So what was your view on January?
Yeah, we think January will be good for demand. We think the consumer will be back out there, especially the good news we've had on inflation this week, and hopefully that will be replicated in interest rates as we move through January. That will really help. Obviously, that helps with dealers' stocking levels as well, or their funding, as well as the monthly payment side of things. So yeah, I think there will be an uptick in activity. There pretty much always is in January. I think that the exception was when we had a lockdown, but obviously we're not having that sort of issue now. So we do think there'll be a little bit of pent up demand as well from those that haven't bought over the period. But with regards to how that affects sort of the guide values that we produce, there will be a lot of cars still out there. The conversion rates are somewhere between 55 and 65%, which means there's 35 to 45% of cars haven't sold or haven't been selling. We think there's definitely pre-reg activity. There's going to be some keen fleet and Motability and rental deals, which means more cars come back into the market. So manufacturers are pushing now to get market share. We've got the ZEV mandate to think about. Do they want to register more petrol and diesel cars in 2023 so that they're not registering them in 2024 so they can hit that 22% threshold? So all of this means that we think there will be plenty of volume around and plenty of choice in January, which will mean that values certainly won't go up. It is a bit of a myth that values go up in January anyway. Over the course of the last 10 or 12 years, there's only been an uplift in January values twice, and they were very, very minor upticks. So we're predicting that values will continue to drop, but we think it will be an improving situation. So trade values come down 2.1% this month. Maybe they'll come down 1.5% next month, something like that, between 1.5 and 2 maybe. So a continuing sort of stabilization, but not to the degree that values will go back up again, just because supply will continue to be quite strong, and demand will eat into some of that, but not all of that.
Yeah, it's like I said right at the start there that I think going to be an interesting one again for different reasons, possibly as we head into 2024 there. I mean, for me, I just want to personally thank you, Derren, for supporting the podcast throughout 2023 and to wish you and the team all the best over Christmas and the new year. I mean, obviously, in terms of, hopefully you'll join us again in 2024 and share your insight on a regular basis to listeners throughout the year. I know they find it very useful to manage, and we say I think the devil is definitely in the detail. I think it's never going to be one that we're going to stop saying, is it? I don't think.
No, it's been a pleasure, Phil, and I know it's difficult times at the moment for the dealers, but we've just been reflecting what we get within the data. It's very data driven, but also, as I say, I do think it's stabilised, and we are trying to sort of encourage the consumer buy. I was on Radio 4 a week or so ago with Umesh, encouraging consumers that now is a really good time to buy a used car. We all talk about live values. I would encourage everybody to get in touch and take live values off us. It's not like there's a huge financial burden compared to monthly values. With our subscriptions, they are, and very much you save money by taking live values, and the uplift is minor. But at the last 3 months, the monthly values have almost been out of date before they've even been published, because when we cut off the live values to produce the monthly, by the time they've been published, they've moved down again. So it is really key. But we're always keen to provide information to the industry and to talk to any dealers that want to talk to us. So anyone wants to, please reach out to me on LinkedIn or drop us an email into CAP HPI. More than happy to help and more than happy to come on the Motor Trade Radio next year. Merry Christmas, everyone.
Yeah, no, fantastic. And as Derren, just to reiterate that, as Derren said there, the December's editorial, which is where the detail is in we've only scratched the surface in this conversation today with Derren. The detail is in the editorial there, which you'll be able to find on the cap-hpi.com website. As of next Wednesday, the 27th, it will be on there, and it'll be through the social channels, as Derren just said. So check out Derren's profile on LinkedIn, and it'll be shared through that as well. And that's where, adding more detail into that is there. And I'm sure that the webinars will be continuing throughout 2024 that you've done this year as well, I presume, Derren.
Yeah, we've got another webinar. I think it's on the 30th of January. So yeah, we'll get the invites out to that early in the year.
Fantastic.
Well, many thanks from me too, Derren. Thanks for joining us. But that's all we have time for this special end of the year weekday Motor Trade Radio podcast. We're back with the headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.